Chief Executive Officer and President of Nortel Networks, for joining us. First off, these earnings coming through stronger than expected. Is this the type of momentum that we're going to see for the next quarter's results as well?
I think we're going to see pretty good performance from Nortel this year. If you've watched us through the course of the year, you've seen our growth rate accelerate as the year went on. It's really our strategy to get ourselves positioned right in the heart of the internet is really playing out for us, and you're seeing it turn up on our top line numbers.
Carrier segment growth in particular, very, very strong. We're talking about the really high tech of the world of telecom networking equipment.
That's right. We made a move a little while ago, seeing that the internet was going to reshape the way service providers build their networks. We made big investments in both our own R&D programs and a number of acquisitions to build a stronger portfolio to go after this. This quarter, we've had 43% growth in revenue in the carrier segment here in the U.S., and orders from that group was actually even stronger than that.
Yeah, the optical products there, I suppose that if you had more available, that you could have sold even more and had even stronger results.
That's right. I've got a number of customers rather upset with me because we extended lead times on our deliveries out, because we've basically been oversold in terms of the volume. Tremendous increase in this area, and we're struggling at this time to keep up, but I think we're going to put that problem behind us during this coming quarter.
So the customer orders are out there. It doesn't sound like Y2K is disrupting anything. These customers who need this equipment want it now. They're not waiting until early next year.
That's right. The carrier industry, the service provider industry, put Y2K behind it a long time ago, and they're really focused on meeting the demands of the industry. A little different situation in the corporate market. The enterprise segment, I think, are still wrestling with the Y2K issue, and it's a little more quiet in that segment.
How about from the standpoint of the enterprise business? Very strong double-digit gains as well there.
Well, that's largely because of our acquisitions that we made during the course of last year, but we're very pleased with that. We're taking this year as also an opportunity to retool our enterprise portfolio. We think that next year most corporations are going to move very aggressively into e-business and e-commerce, and you've seen Nortel make a number of acquisitions and retool our product line to well address that next year, I think, as the IS departments are freed from the Y2K issues and start looking at where they move next.
Is this, in this environment here, is it Nortel versus Lucent Technologies? Nortel versus who at this point?
Well, the big three names I think that are playing out most of the time are Nortel, Lucent, and Cisco. And really, with the move towards the internet and commerce moving to the internet, it is more the data networking companies that are going to play make the calls in the future than the traditional telecom vendors.
Just from the standpoint of international business, Lucent recently reported very strong numbers there. Your numbers looking strong as well.
That's right. We grew 45% type rates in Europe, 35% rates in Asia. We had a big offset in South America because of Brazil. We have a very large presence in Brazil, and that market, of course, tanked last year. But order input from that sector during this quarter has improved, so we're looking forward to a bit stronger performance from the South American markets next year for Nortel.
All righty, we'll have to leave it right there. John Roth, the Vice.
J.P. Morgan upgrading Nortel Network stock to a buy from a long-term buy. The Canadian company expects to grow revenues 20% next year, given its current sales momentum. Nortel earned 28 cents a share this quarter. It beat the estimates by 2 cents. The company had strong sales growth, particularly in wireless systems and fiber optic cable. Nortel shares right now are up 2 7/16 at 57 15/16. Joining us from the Toronto area to talk about Nortel Network's upbeat quarter is CEO John Roth. Mr. Roth, thanks for joining us today.
Thank you, Lauren.
All right, first of all, though, let's start out with your earnings here. You beat the street by a penny. You surprised the street. Did you surprise yourself?
We didn't surprise ourselves. This is part of our strategy to reposition Nortel into the heart of the internet, and you've seen our growth accelerate during the course of the year as a result of that, and we're now confident we can predict higher growth rate for next year as that strategy really takes hold.
In fact, one brokerage house here in New York has actually raised your numbers from 119 for this year to a 140 next year. That is based on Canadian GAP. They have a real positive on the company here. Things do seem to be looking up. Your toughest competitor seems to be Lucent. And interestingly enough, it looks as if you and Lucent have split the globe in half. Lucent seems to be going to Europe and Asia. You're concentrating more on Latin America and Brazil and even here in the Americas. Was that by design, or did that just happen?
Well, we'd like to, I think both of us, follow where our customers are going. We've been focused very intensely on markets around the world. U.S. Market this year, this past quarter, we just grew 43% in the U.S. in our carrier business. We've grown numbers like 45% in Europe in the carrier business, where we've won, I think, 11 of 15 networks now that have been built in Europe as Europe deregulates. We had a very strong exposure in South America, and we've been hammered there because the Brazilian currency issue went into a crisis, as you well know, late last year. And it sort of bottomed out, starting to come back, but that's impacted us there. We're also doing quite well in Asia, where we've grown 35% during this quarter.
Not bad. Meantime, though, on your balance sheet there, we are looking here at actually receivables, and they're relatively high. What can you do to better manage the receivables going forward?
Well, I think that is an issue, and as part of focus, is really what it comes down to. We've been very focused in terms of bringing in the business and getting the orders. We obviously need to put a little more energy into getting the days receivables down.
In the meantime, some folks think that your purchase of Bay Networks is controversial, to say the least here. First of all, when is it going to make money for you, and how would you defend it to those who say this may not have been the smartest choice for Nortel?
Well, it's really turned out to be very, very good for us. Part of our growth rate that you've seen in the carrier segment is the fact that many of the products and technologies we brought in from Bay now are turning up in Nortel sales results. Many people thought we were going after this for an enterprise play. What we tried to make very clear at the time is, no, we saw this technology moving into the service provider area, which is Nortel's bread and butter, 3/4 of our businesses in that sector. And you've now seen that strategy play out as we've taken that technology and embedded in products we sell to carrier customers. We had a very strong quarter for optical, but we equally had a very strong quarter for our new Passport 15,000, which is an ATM switch. Our access business, which is dial access products, which again is a lot of IP technology in there, more than doubled during the quarter. And wireless made a big rebound on the strength of our wireless internet strategy.
Having said all that, it's quite an excellent defense there of the acquisition of Bay Networks. Some analysts say, though, that it still is not added to your bottom line. In other words, it is not accelerating revenue. Your response to that?
Well, I think what people are pointing to is that the revenue growth in our enterprise segment is relatively flat if you exclude the impact of the acquisition. But on that basis, I think I look around at my peer companies, and they've sort of had comparable kinds of results. A little hard to judge that sector this year because many corporations, like ourselves in fact, are focused on making sure we're in good shape for the year 2000 event that's coming up just a matter of days away. And that whole sector has been relatively quiet. We've been spending our time making sure we have a dynamite portfolio for next year when most corporations are going to come out going after e-commerce and e-business. And you've seen Nortel put together a very strong portfolio to service that market need.
True enough here, and certainly the numbers look good for this quarter just reporting here, and yet you are still in recovery mode from a weak first quarter?
Our first quarter was a 25% growth rate. Second quarter was a 30% growth rate. This quarter is a 30% growth rate. And this quarter didn't have as much of the acquisition impact in it, so if you backed out the impact of the acquisition, you'd see that Nortel's growth rate without the Bay acquisition was well over 20%, strong 20% kind of numbers. So you're really seeing Nortel's growth rate accelerate as our strategy moving into the internet is taking hold.
All right. Well, those who are looking favorably upon Nortel says that you are revitalized after a difficult past year, let alone the weak first quarter here. Going forward, what would be your message to shareholders out there today?
What we see really now is that Nortel's portfolio is capable of growing about 6% faster than the market. And so we see continued growth rate next year of over 20% because we think the industry itself is growing between 14 and 15, and we feel confident we can outpace that by about 6 percentage points.
All right. We'll be watching. John Roth of Nortel Networks, the CEO, coming to us from Brampton, Ontario. Thank you very much.